people are just gonna be like, oh man, well, they already know it, so it's not gonna do anything to me, if I'm being absolutely honest with you guys. So straight into the recap. First thing we can do is look at our boxes indicator. So immediately, right off the bat, run through this Asia low, London low. I would have immediately assumed, just because of this high and this immediate reversal, this is going to be a power 3. But after running out these lows, clean displacement upwards. So let's keep this in mind. Yeah, I have to lock in for that. Let's look at the hourly candle, because look at how this looks. This is something that you guys need to realize. We were inside of a wick the entire time. Yo, Bozo. Wait, Bozo is I? Oh, shoot, I didn't see that. I messed that up. So first thing I want to do, we got to look at all of our higher time frame narratives. Of course, we're obviously respecting 705. We're also respecting this fair value gap to an extent. And we have this breaker block right here, which I'm going to end up going back to how I used to draw them out, which is just this entire thing right here. So this is our original breaker inside of OTE. So that's initially what we have. After this run of this low, of course, we want to be looking at standard deviations. I don't remember if we have any one specific. Yes, sir. So I'm just going to do projections right here. Oh, look at that. What is perfectly respected by the bodies for this market maker buy model? Can someone tell me, please? Well, okay, fourth standard deviation, exactly. So, assuming that the bodies is going to respect that as our max expansion and we are going to have a move lower, all we really got to do, especially with Friday, we're going to have a retracement, because it's Friday's a retracement of our overall weekly power of 3. So we can be expecting lower after finishing business with our fourth standard deviation. I would have wanted to see a shift in market structure, a change instead of delivery up here, but the trade I took was completely different. I did not practice what I say. So let's go over my trade. Overall, most of you guys, I woke up really late. I was still able to catch a short though. So I have OTE right here. Second, we tap into a discount fair value gap. We respect that and we end up pushing lower off of that. This is where most people right here, a lot of people are like, I need to go short. I need to go short. I was watching you guys freak out in live chat. Whoever's watching this, they started tripping out for no reason about going short, which I was kind of worried about. I want you guys to be more patient with your trades. Okay, so I'm going to pull some screenshots. I'm going to show them on the monitor real quick. No way Trevor's sending me. Okay, he's texting me. I'll talk to him in a bit. But I'm going to show you guys a screenshot of my short, how much I was up. Yep, right here. This is the short I took. I took a screenshot of it. Boom, that was a short. Let's go. The full take profit was hit. The take profit was initially 2.5k on 3 evals, 3 100k evals, and I was up 1.5k, and I just decided to close because I had to go to summer school. But if you guys can see this is my top step thing, and it was about, I'll go over that in a second actually. I'll draw out standard, our equilibrium. So, obviously this is more of an internal sell model, so let's keep our only equilibrium down, and we are anticipating repricing underneath our original consolidation, so this would originally be my full take profit if I was going to be trading that conditions. So more standard deviations. This is going to be a really long recap because I really want to get in depth with this price action. This is the distribution leg. We could use it to mark out and use projection, but we overall want something that would project more towards something like this and like this. We have 2 legs of standard deviations, and I wanted more of a prominent leg. Oh, this is going to be a long recap. I'm sorry, guys. You guys got to absorb all this knowledge. So, this is initially what happened. We run through these equal lows, and this is where people are like, I need a short, I'm going to miss out. No. Because they were anticipating us to run lower. What does the market makers do to us? They try destroying us in every way possible, especially because most of you guys, there is no high probability PD arrays in here. Maybe you can get away with it, like what happened here, what I did. I'll go over that in a second. With this mitigation block right here, I'll show you how I got away with it. And what was it? Mitigation block, we use the wicks. I've always used the wicks throughout my entire career. But this is where most people are like, I need to go short. They tried forcing shorts. There was no high probability PD right here. I mean, this order block wouldn't even be considered. We would also be looking for inversions, but where is our inversion? If we look at the 2 minute, the 3 minute, I didn't remember seeing any. I can't really recall. We have this one right here, which actually, if you were able to catch this, you are an insanely good trader on the 2 minute. But usually when we're anticipating a reversion to sell side, or buy side, sell side of the curve, this is where we start to, oops. This is where we start to want to look for opposing PD arrays. Reapers, stuff like that. Overall, just look for inversion for value gaps if I want to say it short, but overall, this would be a really good place to get in short. This is a lower short of a market maker sell model after hitting our 4 standard deviation and anticipating our reversion back to it. And I had 830 open marked out. We can't really see our power 3 candle. Sorry. Okay, so going into my short, after retracing, and I'm pretty sure we ran out a bunch of people. A lot of people got stopped here because they're impatient. They want to catch basically the down move. I waited for this retrace into this mitigation block, and this is where I went short. So I went short right here, 1 NQ contract, and I want to see a reaction. I had a 10 handle stop loss a little bit above this wick because I was like, maybe we could just wick into this volume imbalance. We did not do that actually. So where is our standard deviation at? I'm gonna remove all of this. What is, no, I messed up. Where is our, okay, that's it, there we go. I gotta be accurate with you guys. So my full take profit for this, it was this right here. So when we ran low, okay. So when we ran lower, we were close to hitting my take profit. I entered another second NQ contract after I saw the run lower. So once I saw the run lower like this, I was like, this is perfect. I'm going to add on 1 NQ contract. So my position got moved to like right here. I just decided stop is going to go right here. And this is where I put my stop. I was like, I'm just going to hold on to it. And I'm going to go take a shower. I'm going to go chill. And when I saw it run a little bit lower through here, I mean, I still held on to it. Then when we got right down to here, I thought that we were going to hit it. We were going to push or get close to it and just fully shoot back up. I wasn't really thinking about TGIF or anything else at the moment. But after seeing this, I was thinking, we just ran out this low and we're going to continue higher. This is where I closed out my position a little bit after seeing us run up higher. So this is where I closed. So right around here, this is where I FOMO'd basically. Or I didn't really FOMO, I exited way too early. Even though I knew we were going to go down here and even reprice underneath. But something inside of me just, I was scared to hold on to it. So I just closed right when I saw it. We were up 1.1k from the trade on 3 evals. The 300k evals, which this is a perfect sell model. I wish I was more alert so I can actually go more in depth about the algorithmic things, the measuring gaps, the breakaway gaps, stuff like that. I wanted to see one form. I want to see something, a fair value gap that would occur right here. I'd be like, this is a perfect breakaway gap. You can call this one because you didn't retrace back into it. This is more or less breakaway gaps, just something that helps me support holding on to a trade without touching the stop loss. It makes me confident. It just gives confidence. So this is my short entry, 1.1k. Push lower was our measuring. Okay, forget about it. Basically, where else? Did anyone else? Can someone show me their trades real quick? I'll go more into it in a second, but yeah, a lot of people got messed up. Huntington? Caplet, do you live in Minnesota? Oh, you get the payout? Yeah, okay, good. It's starting to click. That's what I need to hear. That was my 2022 model right there, the one you told me. Oh, I'm sorry. I don't know what your 2022 model is. Oh, wait. Yeah, I forgot Huntington's all around. Yeah, okay. Oh, my jaw hurts already. I was talking all day. Alright, so we can go more in depth. I mean, we still had this 4 standard deviation right here that I would have wanted to see get hit. But this is mainly just hindsight right now. Of course, after seeing this order block get respected, you could potentially look for a short. I would always be looking for the higher time frame though. So if this was a higher time frame order block, I'd be more open towards it. But I mean, if we had SMT, where is that at? Did I miss it? Okay, if we had SMT right here, we could have called this kind of like a turtle soup, but no one would actually catch an entry off here. So someone who was in my DMs asked me if this was a valid turtle soup. I wouldn't really say so. I mean, the target was valid. If you entered miraculously off this order block and targeted 4 standard deviation, that would have been nice, but I can't really see a valid entry yet. So I mean, no, this would be the breaker unless we're looking at the higher time frame. I'll show you real quick. Did the high even form? What? I don't. Okay, so yeah, it's right here. There we go. Okay, let's see what we got. We got absolutely nothing, I'm sorry. Or at least right now I can't see anything. Just a bunch of chop, so I wouldn't want to be trading chop. Once we start forming barcodes like that, that's where I'm off. Then we enter lunch. I would go. I had that one market maker sell model where I went crazy on repricing underneath original consolidation. Order block. We already ran our standard deviations. I wouldn't have looked for anything. Nothing this low. Okay. Coming down there, or are you coming up here? Okay. I'm trying to think about what else we had. I mean, we could look at the silver bullets, I guess. because that's the one model I want you guys to learn. Silver bullet. I mean, we didn't even run off this high. We probably formed. Oh, okay, that would have been rough. Any silver bullet traders running? Okay, actually there was no fair value gap on the 5-minute. I wouldn't really consider this one because we've already filled it. There. No, it's effed up. Let's look at the 1-minute. 202. This fair value gap. Okay, so we most definitely would have been tricked and potentially even stopped out if we took the PM silver bullet. Such a clean price action. That I can't recap on it properly. Okay, this fair value gap. We probably would have been using quadrants if we were trading on the 1-minute, focusing on it. If it's a low size, like if it's like 7 handles, I probably would have been able to profit off a trade like this. Well, let's use the quadrants, get an accurate thing. Fair value gap quadrants, it would obviously be a short. We're tapping into this quadrant, which we see get respected. And let's see how much handles our stop is. Yeah, I wouldn't have taken this. Yeah, this happened all throughout the New York session. I'll show you the New York too. I'm going to look at the New York silver bullet. Okay, let's look for the New York silver bullet. So, we started right here. Someone would have banked. Okay, if it happened and I'm thinking about it properly, someone would have banked. Fair value gap, we didn't retrace into that one. No fair value gaps got retraced into. But we formed a... Oh, yeah, this was a perfect, beautiful silver bullet. 2-minute inversion right here. If someone was able to take a short off this, you would have banked a ton. So, yeah, this was the silver bullet that formed. We were inside of this one, but we already nailed out our target, basically. Our target of our 4-standard deviation has already been hit. We would not be looking for longs. We would... Also, what was that? Yeah, we would not be looking for longs if we're looking at internal structure. We would be looking for... Yeah, this is premium. We'd be looking for shorts. So, tap into our quadrants that ICT was talking about. And 15 handle stop loss if you want to be mechanical. Me personally, I would have done... Okay, there is no mean threshold of this order block, which is going to mess me up. My thought process, I can't really say what my thought process at the time would be. But, tapping into this, I probably would have allowed more of a... I guess a 7 handle stop, 7.5 to 6 handle, which that's in between what I like my trades to be, but 15 handles for most of you guys, and then just targeting out 40 handles, which most of you guys would have targeted this low-hanging fruit, and that would have been, there's nothing wrong with it, that's good. Yeah, if you want to buy one up, you want a short, 15 handles. I mean, yeah, I used to have 15 handle stops. I like to never really go above 12 now, usually above 12. 12 or 10 handles, I don't like going above it. Yeah, I have to trade. Yeah, I want you guys to trade it because like most of you guys, you're trying to learn market maker sell models or 2022 models, and most of you guys haven't gotten a payout yet. And you guys might be learning how to trade those when you still haven't gotten a payout, and you're like, my situation is dire. I need the money bad. It's not. It's just focus on the silver bullet, get a payout, learn how to trade with rules, model everything, and then make your money. Prove to yourself that you can make money with trading one model consistently, following the rules of that model. Then you could switch. Really, it's really the beginner platform. Fair value gap, IFEG, the inverse fair value gap is good. Oh, dude. But yeah, I just want to go over that a ton. I cannot stress it enough. The number one reason why I think I'm a good trader, I can literally I trade the silver bullet in the beginning, for the most part, my 5-minute silver bullet, and I trusted that model to keep me profitable. It kept me profitable. Like, I watched myself following the rules, slowly build up equity after 2 weeks and pass an eval and take a payout with that model. I'm like, if I follow a model, I'm going to make money. It clicked in my head. Good psychology. Of course, bro. I'm just trying to tell you guys, it's really important. So, I mean, at the time, I really need to make money. I was urgent. And then I was like, I'm not going to make money if I'm trying to... Because I wasn't really able to fully understand the market maker models or the 2022 model at the time. So I wanted to trade one model that I could just focus on really simply just to get a payout that I knew was profitable instead of having to look for market structure shift, retrace for all that stuff. Just one fair value gap during this time, premium discount, take that short, take my payout, and be done. Charva? Who's Charva? Okay. Silver bullets show up almost daily. I'm not even kidding. There's so much silver bullets. I show the silver bullet daily. They show up a ton. I have a ton of examples of them too. Hold on, well, I'll show you something. Secret. Right here. This is the silver bullets I have. Just retrace it to the premium fair value gap. This is only fair value gap. OTE fair value gap. Another one. Silver bullet. Silver bullet, look at this. Okay, bodies where we respect this. We start respecting this. This is where we take our short off equilibrium. We're inside a premium. We ignore this one because it's inside of a discount. So we're not going to be shorting inside of a discount, obviously, during our silver bullet time. We want to be shorting the premium. Jeez! What is wrong with me? This is the premium. This is, okay, up, premium, down, discount. We don't want to be shorting in a discount. We don't want to be, we want to be shorting in a premium, which is this green. We don't want to be shorting in this discount. So this is invalidated. This is valid up here. And we run out this high, bodies respected. After we see the bodies respected, this is just mohawks. You can short off that. Another example. What was it called? Premium discount for value gap. We tap into it. You can enter off of it. Stop mean threshold of order block. You would have gotten stop break even more than likely. This is a failed silver bullet, but still, if you were able to take profits there, you would have been fine. But hold up, silver bullets occur so much. I mean, honestly, it's a really good model. Yeah, I'm streaming it. I've been streaming on YouTube. But yeah, I wish I could go more in depth about price action. 2 p.m. silver bullet right here, I guess. Yeah, I guess you can call this. If anyone's willing to hold off for same instances too. Silver bullets is really good though. One model, one setup. Make your money, get out, and that's it. I think it's my most trusted model overall. If I was able to see a clean sell model, I'd trust that more than the silver bullet. But still, if I had to resort to one thing, I'd definitely go to the silver bullet. Just learn how to master that. Once it's mastered, you keep making money, and then replace a job. So if I was ever homeless, that's exactly what I'm gonna do. Just grind it out, make more money, copy trade fundeds, whatever. Okay, I think that's about it. I'm gonna end the stream here. Wait, do we have any questions? Any? 9. Yet. I'm gonna wait for the YouTube people to see this. Of course, Astra. I hope you guys enjoyed it. Or Asta. I was really, out of it for this recap. Rules of the silver bullet. Oh, Rusty, I'm sorry. What's the night before? Is that the night? Okay, this is literally today. This is today. So it's a high. That's that low before the high. I don't really understand. Is that what the night before? Wait, I can't even see that. Okay, I showed an example. You can look at my previous recap. I went over the example there. If you have any other questions, just DM me on DM me on Discord. Okay? Okay, risk for 50k XFA, use micros, bro. I'm sorry, you gotta use micros. I don't know if they fixed the handles thing or the micros or mini stuff, but I would 100% recommend using 5 micros if you could. Yeah, 5 micros if you could. Use 5 micros. But if you cannot, use just the minimum size for micros. Because I remember Trade of It had an issue where you can only trade like 2, 1, 2. Yeah, you can only trade 2 micros. But if you can stick with that, then you're good. Because, oh, jeez, I don't remember how much it is. And 3k is max loss. I mean, don't go above 10 handles. That's my rule. Don't go above 10 handles. I think 10 handles, yeah, it's $200 that you're going to be risking. So, I mean, if you're willing to, try trading a silver bullet with one full NQ contract. You have to take more than 10 losses in a row to fail. And the silver bullet has an over 50% win rate. So if you're trading like a 1 to 2, you're going to be profitable. Just trading one NQ contract, you'd be fine. So yeah, trade one NQ contract, maybe risk 10 handles. That's a lot, unless you're in drawdown. I really recommend sticking with micros because you get emotional watching minis move, because they move a ton. But you could just secure 10 handles, 20 handles, make $400 while risking 200, then you're fine trading that XFA. Okay. Hopefully you understand that. This recap, it's live stream, so you can watch it right now. On 50k, because your max loss. No, I messed that up. Your max loss is gonna be $2,000, so you can only lose $10. I was thinking about the 100ks. So yeah, your max loss can be two. Also silver bullet example. I don't know how much viewers we have, but yeah, 50k. Your max. I think the max daily loss is 1,000, then the max loss is 2,000. 10 losses in a row to blow that count. I don't think you're gonna lose 10 times in a row trading the silver bullet. Just trade only the AM silver bullet. That one's high probability. I'll pull up the examples again. These are some examples I just wrote down in the other place, the secret place. So right here, this is just discount fair value gap. We tap into it. See, there's no other fair value gap. This is the first one that we have inside of our time. Discount, retrace, tap into it. Target buy side, we take that out. Where's our other stuff at? This is another one. tap. Okay, this is a higher time frame fair value gap, or OTE with it, which more high probability. Another example, this one's inside of discount. We tap into it, we take our entry, stop, and threshold the order block. I think it's like 7 to 9 handles. Target out internal buy side, eventually targeting out external, which if you have a 150k or 100k account, you could take partials. If you're trading 2 and Q contracts, which is what I did with a 150k account, I take partials here, full take profit here, which I'm going to start going against partials and just be like full take profit hits or nothing at all. So yeah, bodies are spec, our premium silver bullet for value gap, and this is where we take our short. This is discount, we ignore it. This is premium, we short inside of discount. Premium, I mean, killed silver bullet right here. And yeah, we had a good example today. Today's example of the silver bullet, it was just retrace premium fair value gap right here. First one that we form, and the other one is ignored because we never retrace into it. Advanced breaker, his ICT's advanced breaker model, I could try drawing it out. Oh, I wish my notes on it didn't delete itself. I was on a plane, so it was not saved. But the advanced breaker is when we have internal buy side and external overlapping each other. So I'm going to try finding a good example of that. This would be a perfect example. So imagine we have some sort of external buy side right here. We run up higher and we did not take it out. So this is our external buy side. So imagine a high gets made right here. We go lower. ICT's advanced breaker, it would be when we're anticipating after run lower, we want to enter off probably the first fair value gap, bullish fair value gap that we have after retracing or throw retrace into the discount. So I'm going to use RT, not really because I want to, it's just more simpler for me. But at least when we retrace into a premium, we have this fair value gap. Sometimes I like to enter off these, but this one's in a premium. I wouldn't want to take it. I'll just confirm to see if it is. Yeah, that one's in a premium, but we have internal and external buy side resting above each other. We have this fair value gap that we want to retrace back down into. So basically, we're just taking it, anticipating this to form into a breaker. So a high ticket ran out, internal and external ticket ran out, and we shift market structure and push over. So I think the best way to put it, of course, we have the market maker. Yeah, it's just advanced breaker. It's advanced breaker theory. It's how we anticipate our breakers. Oh, okay. Jeez. So we have this high, we run through this high, push lower, retrace into the breaker, and we keep running. So this is our breaker right here because we ran out this high. So where we are doing it in the advanced breaker, it's where we zoom into this, and this is where we try to look for longs off basically just a retrace into a fair value gap after retracing into a discount. That's the most easiest way I can explain it. So we take a long off here, we target the external buy side, and that's the advanced breaker theory. And this right here turns into a breaker that we retrace into and we use as, what was it? Oh shoot, I don't want to go into higher time frames. This is a breaker on the higher time frame. I used to use the wicks like this. I used to draw it like this and just consider it a breaker, but some people are making me look at it more as an order block. Overall, this is a breaker that we formed, and we are anticipating, which is the advanced breaker, we're anticipating it to form, and that's all we really do. Retrace into this volume balance right here too. Oh jeez, 25 handles. I want to start using stop losses at the lows. If this was anything lower or within my risk, I'd do it. But yeah, that's about it. That's the advanced breaker. I could double check my notes. Hopefully I'm not wrong. 2023 mentorship. I remember it very vividly though. It was one of my better things I like to look at. I'll search it up. Hold on, let's see. I don't think I have any questions in grid. Gatekeep ICT. I'm not gatekeeping ICT. It's gonna be more of just like, oh, is it? I gotta fill it all out entirely first. But I already made a video on the silver bullet. All the info or all the stuff I have in there is already on YouTube, so you can find it on YouTube. Advanced theory on ICT breaker. 2 times, which I don't know why my images didn't work. Right here and right here. I like to do notes twice. This one both in 2024. Time distortion, standard deviation. Oh yeah, we can target standard deviations off that range too. Like first and second standard deviation. Yeah, you're longing the retracement back into the breaker. SMT and breaker. The inefficiencies are a point of reference. See this fair value gap that we retrace into. This isn't even a discount. He's going against what he said. But basically targeting the buy side liquidity, which that would have been a good example. We run out this low. There we go. Internal and external buy side before a high gets run out is an anticipated breaker. This is it. I mean, I don't know if we fully need to retrace into a discount. That's what I want to see personally, which every time I've taken a trade off of it, I've always used it. And we take it from the measured move to the first standard deviation. So right here, we can anticipate where the high is going to form. Share that note. I would if this wasn't fixed. This one is incomplete, which I did it when I was on call with Lucid a while ago. He's not even, oh, he's right here. Perfect. But yeah, this is just a more in-depth that I had, and this is how I learned it better. But yeah, you're long. Then we target for standard deviation. It's easier. And he's just bread and butter there. We can carve out income career strictly off this model, which that's also another interesting thing, but I haven't back tested it, so I can't say it's real. ICT also says don't trust his word. Look into the markets and see if you trust it for yourself. So basically, he doesn't want you to trust him. He wants you to look, find these models, backtest them, and see if they work for themselves. So if we understand A and B leg, or ignoring the run, safe here. We've already had a stop run, and there's no need for another run on stops. So there's no reason to run out this low again. So I think he's referring to if we had a run on sell side liquidity again, or like an internal run on sell side, which hopefully I can find a better example for that model. You basically just look at a breaker on the higher time frame and you just zoom into it, which we don't really. I want to find one right off the bat. Probably just like a sell model turned into a breaker. Okay, we'll use this one. Please go back to it. No, it's gone. Are you serious? That wasn't it. Okay. Who am I supposed to? Who am I? Look at the 3 drives to this high. I haven't seen this in a while. This is probably one of my favorite selling things to look for, though. 3 drives. More breakers. Where are our breakers at? This is going to be really hard to find one, especially when we're just zooming through them. We're perfect setup. Honestly, we might have to be looking for the higher time frames. Okay. Put it on Discord? Yeah, I can. I I recommend taking your own notes, but if you want mine, I'll drop them, don't worry. Okay. I'll just look for the higher time frame. I'm a gape. What was it? I can't even find it, or I can't even find a proper example right now. Yeah. I'm done for. I'm too tired. I'm sorry. Fair value gap retrace. Yeah, I can't see anything. Probably because we were just pumping up, but if we look really closely, we might be able to just find one. Nope, I'm not gonna find one. But yeah, I think that's about everything we have. Do we have any other questions, or is that it? Is that everything? Wow. What is a breaker block? Yes, of course, Rusty. It's my pleasure. Alright. Have a good night. Everyone on YouTube. Holding on to trades, just set it and forget it. That's literally the number one tip. Everyone says it, but literally, set it, take profit, stop loss, turn off your phone, turn off your computer, and just leave. That's it. That's really the best thing to do. Then you're gonna come back, either your take profit hit or your stop loss is hit, and you just journal it. Once you journal it, you are unstoppable. You learn from feedback, not from practice. That's something I've realized. Not from practicing, back testing, or whatever. You learn from feedbacks from your own trade, which that's similar. But when you forward test and actually act like it's real trading environments, and you what was it? Just journal your feedback or whatever, or just learn from feedback itself. That's where you grow the most. I'd say it's 50% more effective than back testing and studying. Once you study, but you should be chilling. Always journal. Always look at your trades. Always feedback. Always recap, and you're good. All right.